price target in terms of 300, but do you think we're near a low here, depending on what happens next week?
I mean, I think right now a lot of the bad news is I mean, we wouldn't be bullish if I didn't think that this stock is
Why not put a buy on it then?
That is our highest rating.
Outperforms your highest rating?
Outperforming. It's on our top picks list. And I just view it as we've been through these white knuckle periods before over the years. This is another one now that we're hitting. And we're just calling it out, give out the strategy to what Musk needs to do in the conference call to get through some dark days ahead.
He doesn't really listen, though, to we've seen when you ask him about how do you feel about criticism, he doesn't. He's going to do what he thinks is right, and he's in a position to be able to do that.
No doubt, but I do think...
Will he, you said no adults in the room, you think he'll return to giving the street what it wants in these calls?
Well, I think ever since they lost their CFO since August, there have been basically Nightmare on Elm Street conference calls. This, I believe, is a wake-up call from a demand perspective. And look, if they don't lay this out in terms of the strategy and turn this around, then you could not just have some darker days, but I believe a lot of investors will start to lose faith in where the Tesla story is going, even though we're in between two growth waves. And that's our whole point, is that this is a nightmare in the near term. There's massive growth on the other side. You need to handhold investors through it, no different than we've seen Jensen, Cook, and the others over the years.
How would you feel if someone told you that the solution to one of your biggest problems is actually easier than you thought? My guess is you'll probably feel less need to worry and ponder on the issue. Well, that might just be how many Tesla investors felt after Dan Ives revealed what could end the downward streak in Tesla's stock price. And guess what? It's Elon Musk.
Tesla expected to report first quarter deliveries next week. Joining us now on why he's lowering his price target on the stock ahead of those numbers is Dan Ives, Wedbush Securities managing partner. I don't know, it just makes me smile a little bit, Dan. You could be lowering your numbers because the stock's at 175 and your target's 315. That'd be a good reason. We'll get all your other reasons, but that's a good start, I think. But it's a little bit odd. You're going down $15 to 300, and you're keeping an outperform rating. All this sounds sort of, I don't know, too little, too late.
Yeah, look, I mean, it's obviously a great point. Look, we're bullish for Tesla on the other side.
Well, you must be, because you still have a $300 price target.
This challenging
what's that return from 180 to 300 is? So you're still looking for like a 70% return.
Yeah,
right?
and look, we've been here before. In other words, like there's no doubt, and we call it out. I mean, this is a code red situation for Tesla. I mean, they are going through some dark days in China from a demand perspective. But Joe, I believe on the other side of this, this is a company, not just from an FSD perspective, but from volume that could start to get 2.5, 3 million vehicles per year as we go into the next few years. Our whole point here is you're in between two growth waves here. They clearly need to lay out a strategy for investors because this is going to be a rip the Band-Aid off delivery quarter next week, and there's no smoke and mirror about it. And I think right now for Musk, I kind of view it as a fork in the road period to handhold investors through this.
You are pretty blunt. First quarter deliveries for Tesla, and we'll find out next week, but you expect it to be a nightmare quarter because of China and China demand.
Yeah, I mean, China, we originally had that up 3-4%. It's going to be down 3 to 4%. And the issue here, is just that Game of Thrones price war that's happened in China with EVs. It's hurt Tesla, and I think right now the problem is, do they continue to cut prices, or do they ultimately hold serve and focus on where demand could be? And I think as much as we talk about FSD and why we're long-term bullish, and I do believe we're sitting here a year and a half from now at $1 trillion plus market cap.
Yeah, so when we were up at 300 or 299, wherever it was, I get at that point, were you still worried about supply and you didn't see the demand issues coming?
Yeah, I think where we were dead wrong is underestimating just how bad China demand was going to be.
China demand.
So for us, when I look back, that's really what's caught us, I think, many by surprise in terms of just how quickly demands come off, but also with no adult in the room, and with 2 disaster conference calls in a row. They haven't laid out guidance. They haven't given the strategy. You've had other noise in terms of the AI issues with Musk and obviously the Delaware comp issue, which is added to it. But I think that's the problem. They haven't laid out the strategy to where investors right now feel like they're blindfolded playing darts.
Tesla, as we all probably know, has been on a bit of a roller coaster ride lately, trending more downhill than up. According to CNBC, shares of the automaker plunged 29% in the first 3 months of this year, marking the worst quarter for the stock since the end of 2022 and the third worst since Tesla went public in 2010. This makes Tesla the biggest loser in the S&P 500 this year. Even Dan Ives himself admits that this is a code red situation for Tesla. But why is this happening to the automaker in the first place? There are multiple reasons. First up, there's the competition heating up. BYD recently zoomed past Tesla to become the world's biggest seller of EVs last quarter. And just like Tesla, the car maker is also aiming to produce low-cost EVs in order to boost EV adoption. In addition to that, there have been concerns about slowing economic growth in China, which could dampen demand for Tesla's products in the country that accounted for around 22% of Tesla's revenue in 2023. And Tesla's own production woes haven't helped either. For instance, the automaker shutting down its Berlin factory thanks to arson threats had slowed its production, as the factory produces around 850 Teslas each day. This caused some analysts and firms to cut down on their price targets. All these and many more have taken a toll on Tesla stock, causing it to plunge even lower. But let's pause for a moment because the solution for all of Tesla's problems seems to be at hand. Tesla has hit a bumpy road, no doubt, but who better to navigate a bumpy road than Elon Musk himself?
The last base camp, and I think it reflects a lot of his philosophy around how he builds cultures and teams. So you have 2 teams. The Japanese team has 4 rowers and 1 steerer, and the American team has 4 steerers and 1 rower. And can anyone guess, when the American team loses, what do? Shout it out. Exactly. They fire the rower. And Elon shared this example, I think, as a reflection of how he thinks about hiring the right people, building the right teams at the right ratio. From working so closely with folks like these incredible leaders, what have you learned?
So I would say definitely Elon runs his companies in an extremely unique style. I don't actually think that people appreciate how unique it is. You sort of like even read about it and so much you don't understand it, I think. It's like even hard to describe. I don't even know where to start, but it's like a very unique, different thing. Like I like to say that he runs the biggest startups. And I think it's just, I don't even know basically like how to describe it. It almost feels like it's a longer sort of thing that I have to think through. But well, number one is like, so he likes very small, strong, highly technical teams. So that's number one. So I would say at companies by default, they sort of like the teams grow and they get large. Elon was always like a force against growth. I would have to work and expend effort to hire people. I would have to like basically plead to hire people. And then the other thing is that big companies, usually you want, it's really hard to get rid of low performers. And I think Elon is very friendly to, by default, getting rid of low performers. So I actually had to fight for people to keep them on the team because he would by default want to remove people. And so that's one thing. So keep a small, strong, highly technical team. No middle management that is kind of like non-technical for sure. So that's number one. Number two is kind of like the vibes of how everything runs and how it feels when he sort of like walks into the office. He wants it to be a vibrant place. People are walking around, they're pacing around, they're working on exciting stuff, they're charting something, they're coding. You know, he doesn't like stagnation. He doesn't like for it to look that way. He doesn't like large meetings. He always encourages people to like leave meetings if they're not being useful. So actually you do see this, or you know, it's a large meeting and if you're not contributing and you're not learning, you just walk out. And this is like fully encouraged. And I think this is something that you don't normally see. So I think like vibes is—
Elon Musk is a visionary leader. He's faced challenges before and emerged stronger. Whether it's through ramping up production, generating positive PR, or simply out-innovating the competition, the Tesla CEO has the tools to get Tesla back on track. So, will his efforts send the stock price soaring to new heights? Let's see. Hello everyone and welcome back to Tesla Tomorrow. While stock market indexes continue to notch a string of record highs this year, 2024 has not been so kind for Tesla. In less than 3 months, the EV maker has shed nearly 30%, erasing more than $230 billion in value as of the time of this video. This has caused firms like Wells Fargo and Bernstein to lower their price target for Tesla stock, as well as their Tesla production forecast. Bernstein analysts, for instance, wrote that despite Tesla's growth prospects, the automaker's high stock valuations are hard to justify. They'd also added that while Tesla's full self-driving could add up to $40 per share to Tesla's stock price, the pricing would be competed away, as Tesla is not alone in pursuing FSD and is even behind in robotics, AI, and the robotaxi service. So how possible is it for Elon Musk to find a remedy for this chaotic situation that Tesla is in right now? Let's find out. But before we continue, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. Elon Musk is not just a name that resonates among Tesla investors. Instead, it's a name that symbolizes growth and cutting-edge innovations. Needless to say, the Tesla CEO has occupied the position of the world's richest man several times since 2021, even though he's had to battle it out with the likes of Jeff Bezos and Bernard Arnault. But that's just by the way. Tesla, under the leadership of Elon Musk, has experienced remarkable growth. Being a leader in technology and efficiency, the automaker has some of the most advanced manufacturing capabilities and software development efforts in the industry. For Elon Musk, he sees a path filled with innovation, growth, and an unwavering commitment to Tesla's mission of accelerating the world's transition to sustainable energy. Over the next decade, Tesla will continue to push the boundaries of what's possible in the automotive industry, and this growth will possibly be thanks to its brilliant CEO and the amazing team at Tesla. So, to the big question, is Elon Musk going to be Tesla's savior in these turbulent times? Let's hear from Andrej Karpathy, the former director of AI at Tesla.
Lever that I think he really instills culturally. Maybe part of that also is like, I think a lot of bigger companies, they like pamper employees. I think like there's much less of that. It's like the culture of it is you're there to do your best technical work, and there's the intensity and so on. And I think maybe the last one that is very unique and very interesting and very strange is just how connected he is to the team. So usually a CEO of a company is like a remote person 5 layers up who talks to their VPs, who talk to their reports and directors, and eventually you talk to your manager. That's not how your companies, right? Like he will come to the office, he will talk to the engineers. Many of the meetings that we had were like, 50 people in the room with Elon, and he talks directly to the engineers. He doesn't want to talk just to the VPs and the directors. Normally people would spend like 99% of the time maybe talking to the VPs. He spends maybe 50% of the time, and he just wants to talk to the engineers. So if the team is small and strong, then engineers and the code are the source of truth. And so they have the source of truth, not some manager, and he wants to talk to them to understand the actual state of things and what should be done to improve it. So I would say like the degree to which he's connected with the team and not something remote is also unique. And also just like his large hammer and his willingness to exercise it within the organization. So maybe if he talks to the engineers and they bring up that, what's blocking you? Okay, I don't have enough GPUs to run my thing. And he's like, oh, okay. And if he hears that twice, he's gonna be like, okay, this is a problem. So like, what is our timeline? And when you don't have satisfying answers, he's like, okay, I want to talk to the person in charge of the GPU cluster. And like someone dials the phone and he's just like, okay, double the cluster right now. Like let's have a meeting tomorrow. From now on, send me daily updates until the cluster is twice the size. And then they kind of like push back and they're like, okay, well, we have this procurement set up, we have this timeline, and NVIDIA says that we don't have enough GPUs and it will take 6 months or something. And then you get a rise of an eyebrow. And then he's like, okay, I want to talk to Jensen. And then he just kind of like removes bottlenecks. So I think the extent to which he's like extremely involved and removes bottlenecks and applies his hammer, I think is also like not appreciated. So I think there's like a lot of these kinds of aspects that are very unique, I would say, and very interesting. And honestly, like going to a normal company outside of that you definitely miss aspects of that. And so I think, yeah, that's maybe that's a long rant, but that's just kind of like, I don't think I hit on all the points, but it is a very unique thing, and it's very interesting, and yeah, I guess that's it.
One way Musk can inject some rocket fuel into the stock price is by focusing on boosting production. Tesla set the ambitious goal of producing 20 million cars by 2030, and the company can become close to that goal by investing more in its Tesla bots and using them to automate a lot of the production, which is something that Elon has been enthusiastic about. Elon recognizes that there's a lot of value in the company's robotics business, saying that the majority of Tesla's long-term value will be attributed to projects like Optimus. So, it's definitely something he could get behind more to help Tesla get out of its current slump. Another strategy could be positive PR. Now, Elon Musk is a master of social media, but maybe it's time to dial down the tweets about politics and focus on Tesla's achievements. Making high-profile announcements about advancements in battery technology, especially after it was reported that Tesla is working with China's leading battery company, CATL, on new battery technology, or that mind-blowing self-driving software would be a welcome change. And we know that investors love good news, and maybe a steady stream of positive updates could turn the tide. There's also the fact that there's a harsh competition in the EV market currently. Tesla isn't the only player in the market anymore, and new startups are nipping at its heels. So maybe Musk can use this as motivation to push Tesla even further. Imagine a press conference where Elon Musk unveils a groundbreaking new feature that leaves the competition in the dust. This could send a clear message that Tesla isn't going anywhere. Of course, there's the whole economic issue to consider. There's no denying that a shaky global market can drag even the strongest companies down. However, while this is somewhat out of Musk's control, he can focus on what he can influence, which is Tesla's core business. By streamlining operations, controlling costs, and maybe even offering some enticing incentives for new car buyers, Tesla can weather the economic storm.
You believe that people may be overblowing the growth concerns, even with China down quarter over quarter, Europe also down quarter over quarter. We don't talk often about that story. But you say the lofty valuation of Tesla, 60 times forward earnings, that has nothing to do with EVs in your mind.
Yeah, that's right. And actually, I agree with what your speaker was saying just now with what's happening in the quarter. I think everybody knew Q1 was going to be weak. There was a big pull forward of demand into Q4 because of the IRA expiry. There was also the Red Sea impact on Europe in February this year. We've known that things were slowing down. Model 3, Model Y are getting saturated. The newer model isn't coming until 2025. This is a company you need to look at in tectonic terms. And in any event, this is not Toyota. It's not a car business. It's an autonomy business, and it's an energy storage business. I'd love to hear what your speaker thinks is the valuation of energy storage, going from 100 gigawatt hours to 2 terawatt hours, 20-fold increase. Tesla has 15% market share of that business, and those margins are actually better than the auto business. I think that'll be worth more for Tesla than its car business. We haven't even talked about autonomy. Giving FSD for free for a month could be really big to catalyze growth here, and get volumes reignited for Q2.
All right, so listen, you're throwing down the gauntlet. That's what we want here, Tom. We appreciate that. So, Craig, I'm going to come over to you about the storage question first, and we'll get back to full self-driving. What is your answer about the fact that he's basing the valuation, again, on autonomy and also storage?
So autonomy, robotics, and storage are the three subjects that people care about most. I'm the only analyst on the sell side, only analyst on the street that actually worked in the battery industry, worked in the storage industry. I'll tell you, margins there are razor thin. I work with a number of companies that are very active there. You know, a couple of years ago, you saw the exit of NEC, which dominated that market. You know, there's a lot of frothy bullishness. We have to be careful with expectations. There's some good companies out there. Tesla is one of them. But, you know, you don't get to, $600 billion valuation on storage. That's just not rational. Okay. So robotics, Boston Dynamics is the winner. You know, Hyundai bought that for $1.1 billion from SoftBank. You know, maybe it's worth 10 today. It's not worth 600. You know, and this whole AI thing, FSD, you know, if you're going to do level 4, it's going to consume more electricity, more electrons to support the compute of that level 4 autonomy than the drivetrain. That's a non-starter. So, you know, I look at this and I say there's some fundamental flaws in the bull thesis. And, it's egregiously overvalued.
All right, so Tom, I think he answered a couple of your points. He also worked in the battery industry, but I want to come back to you, Tom. I know you're very bullish, but when it comes to full self-driving, haven't we seen a lot of difficulties when it comes to this? We've seen some other companies get out of that space just because of the trouble executing.
Yeah, that's right. And I just really quickly just want to say energy storage, Tesla's actually already making more profit on that business than they are on their car business. I actually went to the Lathrop facility a few weeks ago and saw it firsthand. Also met with utilities who suggest the growth there. On FSD, you're right. It's really difficult to do this. That's why a lot of companies are pulling out of it. FSD, I just want to correct also your speaker. It's not level 4, right? It's level 2 plus. It's 80% of your driving on highways. Tesla's the only one that does automated lane changing. It does exits for you. I think a lot of the concerns have been these accidents that you see happening on small roads. That's when you and I can just take the car over. But the 80% of the driving that happens on highways, I'm telling you, this product is amazing. You guys need to try it. It is simply amazing. No other really automaker has something on the road with this many miles. And now they're going to get to try it. I do think the pricing is too high. Once they drop the pricing, attach rate goes up, you could get an autonomy multiple on that. So it's a level 2 plus offering, not level 4 just.
There is a bit of a general shift in investor sentiment, but it's too early to say if Tesla headed for a breakdown lane. For one, it's still the biggest name in EVs, and its innovation can't be ignored. Also, while Tesla stock is currently the worst performer on the S&P 500, its price remains high on almost every valuation metric compared to both traditional and higher growth auto OEMs. The stock also looks expensive relative to its reduced growth expectations when measured against tech comps. And let's not forget, as Dan Ives said, there's the Elon Musk factor. Tesla's CEO is there to steer the ship, so maybe there's not much to worry about. Tesla has cultivated a strong brand image and enjoys a passionate and loyal customer base. Its vehicles are known for their performance, range, and cutting-edge features. This company also has a strong following among tech enthusiasts, environmentalists, and early adopters, which contributes to its competitive advantage and market appeal. There are several variables that could shake the Tesla stock price in a few years, including macroeconomic factors such as interest rates, as higher rates will typically lead to lower equity valuations. In addition, higher rates may also depress the demand for vehicles, as borrowing costs will tend to increase. Remember, the federal interest rates might be cut this year, as the Fed said it remained committed to the cutting plan. So maybe this short-term noise is just a distraction. Maybe investors need to analyze Tesla from different aspects, because that way they will be able to determine how much Tesla could bring in sales, as well as profits in the next 5 to 10 years. What do you think about Dan Ives' comment though? And what strategies can Tesla implement to get its stock flying high again? Let us know your thoughts in the comment section. If you would like to know more latest updates about Tesla, then go ahead and click on the next video on your screen. See you there.